I think we are already in crypto spring. And a lot of you may have lost your faith in crypto because prices haven't gone up. Your friends might be quitting. There's been rage quitting in crypto. And a lot of folks have been thinking that the story has been about AI. I think this is all of what you should expect at the bottom of a cycle. And in fact, I've got some slides here to talk about why agentic AI is really one of the big legs for the crypto story, and it's going to play out this year. So I'm going to break this conversation into 3 parts. Okay, the first is just a macro explanation. The 5 reasons why I believe crypto spring is here. So even if you don't believe in a lot of the products being built in blockchains and in crypto, there's 5 tailwinds emerging. Is explaining to you why Ethereum really is probably the best example of the future of money. And I will talk about foundations and the role that foundations should play in this new system. And the third is, of course, then saying if you're going to want to have exposure, in some ways you're better off buying a crypto DAT rather than buying the underlying token. Okay, so why do I believe crypto spring is here? Well, this is the price chart of Ethereum, and you can see it's been consolidating, stuck in this range for almost 5 years now. And it is waiting for a decisive breakout. Now, if you're bearish, you might think it's going to break down. I'll explain why I think this is going to be resolved in a very bullish breakout. First, the first catalyst is the Iran war is going to end. Now, I know a lot of people don't think there's any connection between crypto prices and a war in Iran, but keep in mind, the Iran war has caused problems with the price of oil and the supply of oil. Now, why would this matter to anybody? Well, oil is a root driver of inflation. So if there's an inflation problem created by oil, then it means central banks have to be tight globally. And that's actually what we're seeing. Oil prices have gone up. Petroleum products supplies have been severely impacted, and policymakers have to raise interest rates. So if the war ends, I think that you're going to see a collapse in oil. And in fact, if any of you are technicians, you know that this is probably likely, that if the war ends, the terror premium will come out of oil, and maybe we see $40 oil. Ethereum has huge negative correlation to oil right now. In fact, it's the highest inverse correlation ever in the history of Ethereum. So clearly, rising oil is negative for ETH's price. We can see it statistically. And if you don't believe me about inflation and oil, take a look at this chart. This chart starts in 1985. The top chart is the price change of oil. The bottom is core CPI. And as you can see, every time we had a sustained spike in oil, core CPI accelerates higher. So if this is a long war, we're going to have inflation. And in fact, the FOMC last month said the same thing. In their minutes, they said that policy firming would be appropriate if inflation were to continue and persist above 2%. So central banks don't want inflation above 2%. If oil stays high, they're going to be hawkish. However, we're betting on a war that ends soon. The second positive catalyst on the macro is the Clarity Act. It's a huge deal. We all know why the Clarity Act matters. I mean, basically, it provides a legitimate framework for crypto to proliferate in the US, but also financial institutions to build. But unfortunately, the market only believes there's a 56% chance Clarity Act gets signed this year. Now, I've talked to a lot of folks in Washington, including our own policy experts. It does seem like the odds are much higher. The prediction markets are trying to find equilibrium, but I do think the probability of passage is much higher than 56%. But of course, we know that big banks don't want this to happen. But keep in mind, the big banks don't write policy. Laws are written to represent people, and that's why we have to keep in mind there are a lot of constituents that want to see the Clarity Act passed. If that passes, it's a big catalyst. The third positive catalyst is, of course, don't forget the White House is a very pro-Bitcoin, pro-crypto White House. It's also very good for the US dollar policy, especially with regard to stablecoins. The fourth is we have a new Fed chair, Kevin Warsh, and Kevin Warsh is pro-Bitcoin. And finally, the stock market has a massive tailwind. I know a lot of you guys may be bearish on equities because you think they've run too far, but at Fundstrat, which is another hat I wear, we've been bullish on stocks structurally, and a lot of it has to do with this chart. This chart is the number of people in America aged 30 to 50. Every time it goes up, the US economy will grow faster than trend. And we are seeing this above trend because of millennials, Gen Z, and Gen Alpha. And as you can see on this chart, if you overlay equity returns with the number of people aged 30 to 50, the stock market has always risen parabolically. And this tells us that markets, the S&P could be 15,000 to 18,000 by the end of this decade. So these are the tailwinds for crypto. But of course, you're still going to wonder why crypto is so weak. And I think it's because people are forgetting that crypto is the future of money. Okay, the first thing I want to cover is agentic and robotics and why crypto will play a role. This is a list of all the milestones since ChatGPT was introduced in 2023. Okay, and there's been significant advances in the last 3 years. Of course, the first was the launch of ChatGPT. The second, which happened in 2024, was when the agent systems began to develop capabilities to work with websites, interact with websites. Then the third big advancement has been robotics. Optimus Prime and their dexterity, and of course, in the Ukraine, building drones at industrial scale. And then finally, we're seeing superhuman capabilities develop. So OpenAI developed solved an 80-year-old puzzle, and then Figure AI launched a robot that could actually build and operate at scale in a warehouse. Okay, so that means in the future, robots are already going to dominate most traffic on the internet. And this is why Mark Andreessen and others have talked about this as being the grand unification, because if you've got robot systems, you're going to have to control them. And that's where blockchain is much more effective than traditional Rails at controlling what robots do. I mean, to give an example, whether it's authentication or identity or payment speed, all of these work better on crypto systems. And you're going to ask yourself, well, why hasn't this been reflected in crypto prices? That's because the stock market is still working its way downstream. The first group that really benefited from the AI ecosystem was the semis, and they're still going up. And then last year it was memory stocks, and they're still in the process of re-rating. But as you can see, the market's starting to now see the AI benefit to the mags, and it's working its way to software. People thought software was going to lose with AI, but you can see this little parabolic spike. Software companies are benefiting from AI because they're developing the downstream applications. And finally, the future infrastructure of AI is going to be on crypto. So to me, it makes perfect sense that we're just working our way through, and I think this is just a matter of months. And if you don't think this is possible, look at the relationship between Ethereum and software. They've moved together in sync for a long time. And now we see a divergence where the software stocks have gone parabolic. And I think it's now just going to be, again, just a matter of weeks before Ethereum prices reflect this. The second story is tokenization. I've talked about this before, so I'm going to go through this very quickly. But we know that Wall Street wants to tokenize, and also they believe the future of money is compute. In fact, many tech founders see this. And part of it is that we're already seeing the future. There's more stablecoin transaction volume than Visa today. And in the future, there's the belief that you could have as much as $300 trillion tokenized in securities markets. And that's going to be tokenizing real estate, fixed income, equities, derivatives, land, and gold. And you can see the tokenized market today is absolutely tiny right here. Okay, so if it's 300 trillion, how does this value crypto or benefit crypto? Keep in mind, crypto prices and the amount of assets tokenized are highly linked. So if a market is going to go to 300 trillion of asset value, Ethereum isn't going to stay at 100 and $200 billion of total network value. Okay. So what does this mean? Well, I think that means that crypto, which delivers a lot of efficiency, are going to replace a lot of the most profitable banks today. And so I want to give you some examples. JP Morgan is the most profitable bank in the world, and they earn 60 billion. But there's a company called Jane Street. I don't know if there's anybody from Jane Street here, but they are just in the business of basically moving money around, and they're going to earn 40 billion this year. That's nearly as much money as JP Morgan, but they only have 3,000 employees. So with 1,000th the number of employees, they're almost as profitable as JP Morgan. Okay? And it shows you just moving money around is more valuable than keeping people's money, and crypto is very good at moving money around. And take a company like Tether. Tether probably going to earn 15 billion this year. It's a crypto native company, and they have 300 employees. If you combine Tether with Jane Street, you make more money than JP Morgan, and JP Morgan is the largest bank in the world. So you get the picture. Investors always give too much value to the incumbent. And I've highlighted this before. Whether in the auto industry, you might have bet on the horse buggy makers, or in digital media, you would have bet on News Corp and Viacom. But as you can see, the new entrant is always the one that captures all the value. And so I think in the next 10 years, 5 of the 10 largest financial institutions will be crypto-native companies. All right, so that gets me to the third point, which is the other thing that we have to keep in mind is these smart contract platforms are probably going to become monetary units of value because it's going to be easier to hold Ethereum, arguably, to do a transaction than it is to hold dollars. And Elon Musk said it best. He says in the future, we're not going to use dollars as a currency. It's just going to be compute and energy. And Standard Chartered, for instance, had a recent report this week about Ethereum. And they made an analogy to Amazon, where there's a lot of tailwinds developing in Ethereum, just like it was like in Amazon. But Amazon's stock price was stuck at $6. And as you know, today Amazon is more than 1,000x from there. So I think one thing to watch, of course, on this is just the Ethereum to Bitcoin ratio. Now, I'm going to jump through this really quick because I want to cover some other things. But if our view is correct, then Ethereum is going to break out of this consolidation. And the consolidation breakout is tokenization and AI. And I think that that's probably 50x or so, but significant upside for Ethereum. And finally, I want to talk about foundations, because in this world, a foundation isn't going to be the right point of centralization for a cryptocurrency. Okay, Vitalik wrote about this year. He says that the Ethereum Foundation is basically going to slim its role, that it's not going to be the entire centralized repository for all things Ethereum. And it makes sense, because Ethereum Foundation doesn't hold as much Ethereum as it used to. It used to hold 17% of the supply. And by 2020, you could see that number dropped to 1%. Last year, when Bitmine started its treasury business, that number dropped to 0.3, and today Ethereum Foundation only owns 100,000 ETH, or 0.1% of the supply. Okay. That's not a lot of Ethereum. That's about $200 million worth. And if you had to live off the typical sort of foundation model of 5% of the return, they can only support about $10 million of grant efforts. But this is where the treasuries come in. The treasuries, which I'm talking about the Ethereum treasuries, and there's Bitmine, SharpLink, among others, now own 7% of the Ethereum supply. If you're an accountant, you know what a treasury stock is. Treasury stock is essentially supply permanently taken out from the ecosystem, but we also own the yield. Now, the yield is around 3%, so today, these public treasuries are generating $500 million a year in rewards. And that is what we can use to fund and grant the crypto ecosystem. Bitmine, by the way, is 4.5% of that total, or 65% of basically all treasury holdings. Okay, well, this is where the plan's going to come together. Because pre-2024, before we had a friendly White House, foundations served important roles. They were funding public goods. They provided a lot of legal and operational infrastructure. They, of course, coordinated the ecosystem. They protected neutrality. And they were trying to bootstrap adoption, okay? I mean, these are really important functions. But that made sense when we were in a DeFi world. I think now we're in 2026. And in this world, a foundation role has to evolve. And I'll explain in a couple of ways. But first, they still want to steward long-term research, right? Quantum resistance, privacy, how to make this blockchain relevant. They want to coordinate private sector efforts. That's really important. Want to develop standards and best practices. I believe they're going to have a public role in terms of representing the ecosystem. But they want to strengthen decentralization. So why do we think this is necessary? Well, Ethereum's a 240 billion network value entity. It's been operating for 11 years, never a single day of downtime. There's 11,500 nodes, okay? And this is in 89 different countries. And there's 15,000 developers. I think this is too big to be coordinated by a single foundation. In fact, I did a lot of research, and I said, okay, well, what are other industries have broad ecosystems, and how do they coordinate? And I've got 3 examples here. In the mobile industry, which I think is the closest analogy to what happened in crypto, there's something called the CTIA. Now, that was established in '82, has 1,000 members today, and they operate and develop all the standards around mobile, but everybody who actually is in the mobile business runs their own business. It's a really important center point for coordination. For the semi-industry, which of course is super relevant today because of AI, they have the Semiconductor Industry Association and the World Semiconductor Council. And again, it's a centralized foundation, but it has a very limited role. And the third is the National Association of Broadcasters, which again, in the earliest days, they're the ones that had to create the broadcast industry. That was started in 1923. Today, of course, broadcast has its own rich ecosystem, but these guys were the ones creating it in the beginning. So when I look at Ethereum, I think there's already the skeletons of that here. These are some examples of private companies that represent the ecosystem, and they're already doing enterprise engagement. Now, this list doesn't yet reflect the spin-outs coming from the Ethereum Foundation. I mean, there's at least 5 and more, and I think Bitmine's going to play a role in granting and supporting any of those that come out. And then you factor in the Bitmines and the SharpLinks. that own collectively 7% of the Ethereum supply and generate $500 million in rewards. So you can see, I mean, if you ask me, my opinion, I think Ethereum is in good hands because the foundation's going to be stronger by staying focused. We've got a lot of private sector companies already building products and important L2s in Ethereum. And of course, the treasuries are here to help with funding and the granting. So I think we've already got the skeleton of a post-2026 foundation world. So if you're bearish, you are selling at the bottom. And again, I can't emphasize, I think if you're bearish today, you are bearish at the bottom for Bitcoin and Ethereum. Okay, well, if you accept what I'm saying, then the Ethereum treasuries are really primed for the next bull cycle. And let me explain to you why. Bitmine, for instance, has been doing a lot of building during this crypto winter. Okay? The first thing we did was we invested in a company called 8Co, which sits at the intersection of AI and identity. The stock's done really well recently if you haven't followed it. The ticker is ORBS. And the biggest investment in 8Co is a big stake, the largest public holder of the world of WorldCoin. Now, WorldCoin is Sam Altman's AI project, but it serves and does something very important. WorldChain is designed to provide proof of human and human verification in a world that's basically run by robots. And keep in mind, as I showed previously, today, non-humans dominate traffic, whether it's polymarket, web, emails, stock trading. I mean, today when you're buying a stock, you're pretty much buying it from a robot. Creating websites, product reviews. A third of all product reviews are fake. And even on Twitter and Reddit, actually we know at Reddit they famously want to get rid of any of the bots posting. In fact, the CEO of Reddit, Alexis, has been in talks with World ID to make sure people have to prove they're human before they even post a comment. Well, that's Orbs. Now, Orbs owns other stakes. Orbs actually owns a stake in OpenAI. It's 28% of the balance sheet. It's a sanctioned holding because Orbs spends time with Sam Altman. And Orbs also owns about 8% in Mr. Beast, 8% in Ethereum, and it has 34% held in cash. Well, there's a similar private company holding co-entity called Fundrise, ticker VCX. They own similar AI-related holdings. That trades at 13 times NAV. If Orbs traded at the same multiple as VCX, Orbs, which is currently $1, would be closer to $15 today. So it's a massively, massively undervalued stock. Okay, the second thing that Bitmine did was launch the largest staking operation in the world. It's not the largest staking operation for Ethereum. It is the largest staking operation, single staking operator in the world. And it's open for business. In fact, Maven already manages and stakes about $2 billion of other people's crypto, including Solana and Hyperliquid, and I believe in the process of onboarding a few other chains as supernodes. So we have about more than $14 billion of assets under management. And as you can see, just our own Ethereum staked is generating a huge amount of rewards, about $1 million a day. So if you're wondering, why do you own Bitmine? If you own it, keep in mind the company makes $1 million a day. You know, in my 30-minute presentation, that means we generated almost $200,000 of staking rewards. The third thing that Bitmine's done is invested in Mr. Beast. I think this is a huge moonshot. If you don't know who he is, he's the greatest content creator in the world. By the way, they just revealed some financial data 2 weeks ago. Their revenues are over $1 billion today, growing revenues at over 50%. So to us, this is the biggest content creator in the world, already $1 billion business, growing at more than 50%, and now he wants to get into banking. They bought Step Financial, and in my opinion, Mr. Beast is going to become the next Robinhood, or the next SoFi, or the next Chime, but for Gen Z and Gen Alpha. There's 120 million of them. That's a lot of people. Now, Gen Z and Gen Alpha may not be very wealthy today. The reason they're not wealthy is they're very young. But keep in mind, the boomers, when they started supporting Schwab, they weren't very wealthy either. And of course, today they're the richest generation ever. Gen X created BlackRock and Blackstone. Again, Gen X, when they were in their 20s, weren't very wealthy. And on top of that, there's a huge wealth transfer coming. Millennials, Gen Z are going to inherit $50 trillion, $60 trillion over the next 20 years. So if you want to bet on the next generation financial companies, bet on the companies that are relevant to Gen Z, Gen Alpha. And by the way, it's crypto as well. And finally, there's been some big milestones for Bitmine. One I can publicly say is that we got uplisted to the big board on the NYSE. That's a big deal because very few companies are traded on the big board, New York Stock Exchange, especially crypto companies. We are one of the few that are trading on the New York Stock Exchange, which is the most prestigious and venerable exchange in the world. But Bitmine also meets the eligibility criteria to be added to the Russell 1000. Now, that was announced last week. The inclusion date is June 26th. Why does that matter? Well, the Russell 1000 is the most widely tracked index in the world. We'll be part of the Russell 1000 index. Every fund manager in the world who is benchmarked against the Russell 1000, and that's over $4 trillion worth, will have to decide if they want to own Bitmine. And by the way, out of, let's say, the 1,600 active managers that are benchmarked to the Russell 1000, remember, 1,600 fund managers have the Russell 1000 as their benchmark. Bitmine has 25 of them as institutional holders. So that means there's 1,575 that will have to decide on June 26th if they want to own Bitmine. And of course, I think that's a huge catalyst for the stock later this year. And finally, it's really Ethereum and what we're going to do because, you know, we got to 1% of Ethereum in August. We got to 4% on April 10th. And we're at 4.5% today. We could get to 5% as early as the end of June, but we may or may not try to do that because we're bullish on Ethereum. I think people would like us to see us complete our purchases, but one of the things that we're also debating is, whether it makes sense to own more than 5%. So before having to make that decision, and instead of crossing 5% and deciding, we're going to take our time. So we'll slow the pace of accumulation until we've decided. And finally, keep in mind, in the final minute, that a proper DAT will outperform the crypto that it's benchmarked against. Last year, from June 30 to December 31, we created Bitmine on June 30th. Ethereum rose 22%. Bitmine rose 500%, massively outperforming Ethereum. This year, Ethereum is down, and I don't think it's going to be down for the full year, but you can see Bitmine is outperforming on the downside. So if we're correct and Ethereum price rises, okay, the x-axis here is Ethereum. The y-axis is our stock price. It's 90% correlated, not surprisingly. But if Etherealize is correct and Ethereum goes to 250,000, okay, that's going to be this very far right here. 250,000 ETH values Bitmine stock at 5,000. It's a bargain at 18. But look, if Ethereum gets to 22,000, which I think is reasonable, our stock is 500. So if you ask me, again, you're better off buying the DATs if you want to have a liquid holding in a crypto treasury. That's everything, and thank you very much.